Lunchtime Report. I'm Manglam Malu, and with me as always is Ekta Batra. And as we speak, it's a phenomenal day of trade so far because last week, we had a big move. At the same time, the Nifty conquered the 23,000 mark today. The first half was a little wobbly, but now it seems that the market's picked up pace and is at the high point, at a record high. And it's led by the Nifty Bank, which has crossed past that 1% mark in terms of gains, and now less than 500 points away from life around 50,000 for the Nifty Bank, Ekta.
Hi, Manglam. Well, yes, records continue to be broken for our markets. We've definitely started the week on a very positive note at this point in time, so no complaining. We did start with more of a consolidatory sort of tone, but now we've picked up pace as you can see on the Nifty. So the Nifty is trading comfortably above 23,000. We have the mid-caps as well as the banks, which are outperforming at this point in time. And while, there are a lot of sectors buzzing, and the bank Nifty is obviously, taking the big headline, I'm tracking the pharmaceutical space today, Manglam. Look at the way all of the pharma stocks have done. The Nifty Pharma Index itself is up around marginally higher, and it's gained around 14% on a year-to-date basis. It's up around 1.3% on a month-to-date basis. Lot of individual stocks which are buzzing around within the pharmaceutical space. So news-wise and news-wise and earnings-wise, I think that's the sector of the day.
Definitely, sector of the day would be pharma. I mean, look at Glenmark Pharma for the broader markets up 7%. We're seeing a decent traction on all the other pharmaceutical names as well. Of course, the top Nifty gainer is Divi Labs after margins hit that 30% mark after 5 quarters. So let's talk about that itself. Ekta, what were your key takeaways from the numbers from Divi Labs this time around?
Well, it's definitely the margins, because the margins came in at above 30%, came in at around 31.7%. It's recovered to those levels after 5 quarters. Remember that the last time we saw those margins were 5 quarters ago, where they did around 33%. Now, the commentary also was positive from the management. So they are estimating long-term double-digit growth. The growth is expected to be aided by long-term supply agreements with one of their innovator companies, customers going forward. Divi is also mulling entering the market for basic amino acids that are key starting materials for GLP-1 drugs. So that would be important to note how they kind of scale it up. 2 molecules are going off patent, which would provide a business opportunity in FY25. 7 molecules over the next 5 years will probably provide a business opportunity as well. Capex 1,500 crores, cash of around 3,200 crores at the end of FY24. Brokerages such as Kotak have retained their sell on account of valuations. Target price 3,250. Goldman Sachs is neutral. Target price 4,020. Jefferies is a hold, but they've raised the target price. Elara sell. Target price 3,017. While Divi Labs is doing well today, you have to keep in mind the punchy valuations for Divi's. It's trading at over 50 times on an FY25 basis and over 40 times on an FY26 basis.
All right, that's about Divi. Ekta, we're not done with our daily dose of medicines, though. Glenmark Pharma up 7% among the top F&O gainers. In fact, the top F&O gainer this afternoon.
Well, yes, more than the numbers, I think the management commentary is what enthused the street. Because while the revenue was up, the street was anticipating a decline. The margins came in at around 15-16%. The street was anticipating those levels. So it wasn't a huge surprise in terms of the numbers. What really got the street was the conference call. So the revenue growth is estimated at around 10 to 11% on a consolidated basis for FY25. EBITDA margins are expected to come in at around 19%. Previous year, they had estimated 19 to 20%. They're targeting double-digit profit growth. R&D expense is expected to be in the range of 7 to 7.25%. Now, Rialtris, this particular inhaler drug that they have, is doing well in the European markets. They're estimating over $80 million in terms of sales from Rialtris this year. When it comes to the Monroe facility, they're requesting the US FDA for a meeting with regards to an inspection at the earliest. So that particular facility does have some outstanding issues. And according to them, FY26 will be a big year for the company in terms of overall growth. So that's the commentary which is coming in, and I think that's what's really enthused the markets.
Indeed. So that's about the pharmaceutical pack. In fact, we're getting at the bottom of your screen some conference call commentary coming in from Bosch as well. Bosch is up around 1.5%, and we'll get you more as the management speaks in the conference call. But the other stock which is buzzing around, the other space which is in focus is the shipyard space, and Cochin Shipyard is the one which has reported a strong set of numbers for the 4th quarter. Stock up around 3.5%. But if you look at the last week or so, you would see a much higher traction, not just in Cochin Shipyard, but all the others as well. So what was so good about the numbers? Upasana joins into the details on that one. Upasna.
The company reported a strong set of numbers in Q4 FY24. Revenue stood at 1,286 crores versus 600 crores on a YoY basis. EBITDA stood at 288 crores versus the EBITDA loss of 68 crores on a YoY basis, while the margins for the current quarter stood at 22.8% and PAT stood at 259 crores versus 39.3 crores on a YoY basis. It is important to note that there was an exceptional item worth 64 crores in Q4 FY23. Now coming to the segments of the company, the shipbuilding, the revenue saw a sharp uptick from 454 crores to 985 crores, and PBIT also stood at 173 crores versus a loss of 88 crores on a YoY basis. Now coming to ship repair, the revenue stood at 301 crore with an uptick of almost 1.06 times on a YoY basis, and margins also expanded sharply from 14.4% to almost as high as 44% on a YoY basis. So all in all, we are seeing a strong set of numbers coming in from Cochin Shipyard in its Q4 FY24.
Okay, all right, Upasna, that's on Cochin Shipyard. But let's shift focus now on to Hindalco. It reported what was a good set of Q4 numbers. Total India and copper business beat estimates. Earlier today, we did speak to Satish Pai, who's the MD of the company, and discussed the current trends in the commodity prices and the outlook going forward. Listen in.
In the last couple of weeks, the aluminium prices have spiked up, but they've been fairly volatile. There have been sort of $100 swings each way, currently running at $25.50. I think that we are sort of working with the fact that the numbers are going to be a little bit more stable around 2,400 rather than the current 2,550 or 2,600. I think our input cost, especially coal cost, there's enough coal available. So I think our cost of production in Q1 is probably going to be a couple of percentage points even lower than Q4. So I think that the EBITDA per ton in Q1 will be certainly higher than the Q4 $967 per ton. So I think Q4 was a little bit exceptional for copper in many ways. The demand for copper rod was very high. If you look at it, we had a record sales of 135 KT of copper. So combined with high LME, that gives us a better margin. I think Q4 was very exceptional. But that being said, the Indian demand for copper is very high. So we think going forward, the 600 crore type of EBITDA range should become the new normal.
Right, that's the view coming in on Hindalco. Take a short break, come back. We have the management of Easy Trip Planners. Prashant Pitti, who's the co-founder, joins in to discuss their numbers, more importantly, the outlook for FY25. Welcome back. The Nifty Bank continues to do well, 49,500, led higher by HDFC Bank. We'll talk about that in just a bit, even as the pharmaceutical stocks continue to be in focus. The one that we're talking about right now is Torrent Pharma. Ekta, Torrent Pharma is the other one which is buzzing around.
Well, yes, absolutely good set of numbers which is coming for Torrent Pharma and in line with what the street was anticipating. But again, the conference call and the guidance from the management was extremely positive. They're estimating domestic growth to be around 200 to 300 basis points higher than the Indian pharma market. They're estimating the Indian pharma market grows around 9% in FY25. The US, according to them, should contribute positively to the top line and bottom line in FY25. They're estimating 15% growth in Brazil, estimating high single-digit growth in Germany, and they have the potential to probably improve margins by 50 to 100 basis points every year. So again, the street seems to be very enthused with what the Torrent Pharma management said. Brokerages, Kotak has maintained a reduce with a target price of 2575. Antique has a buy. They say it's their top pick in the sector. Jefferies has a buy as well, and Nomura has a buy as well. So all of these brokerages largely seem to be quite positive on Torrent Pharma and the way ahead for the company.
All right, so that's about Torrent Pharma. Brokerage is positive. The stock opened much higher, but still holding with a gain of about 2.5%. The other one which is doing extremely well is Astra Microwave, up around 12% after having reported their fourth quarter numbers. Upasna joins us back again to tell us this time around about for Astra Micro. Upasna, what is it that the street liked?
While the company has reported a strong set of numbers in Q4 FY24, the revenue saw an uptick of almost 37% on a YoY basis, and margins also expanded sharply from 12.8% to as high as 24% on a YoY basis. While the margin expansion was mainly due to change in product mix, as the revenue contribution in defense has decreased from 72% to 58% sequentially, while space revenue contribution has increased relatively from 6% to as high as 14% on a quarter-on-quarter basis. While company's PAT also increased 3 times on a YoY basis and stood at 54.4 crores, and company's order book also stands strong at 1956 crores with an uptick of almost 27% on a YoY basis. While company has also highlighted that its JV has turned positive for the first time in FY24. So all in all, we are seeing a strong set of numbers coming in from Astra Microwave products.
All right, that's about Astra Microwave. The stock doing well. Easy Trip Planners is the other one which is on our radar. The stock is, of course, on our radar because of the company's revenues. It's absolutely flat right now. The revenues the fourth quarter increased by 41% year on year, and there was a 2% growth in the revenues quarter on quarter as well. The important part during this quarter, the company has recognized an exceptional loss of about 72.4 crores as amounts recoverable from Go Airlines have been written off. So to discuss this and the business performance more, we do have Prashant Pitti, who's the co-founder of the company, joining in. Thanks a lot, Prashant. Always a pleasure speaking with you. Let's talk about the Go Air issue first before we speak about the numbers and the way forward. What's the course of action now that you've taken a 72.5 crore hit on your books already? Receivables have been written off. The case is currently in NCLT, and what we understand is that Nishant also has withdrawn the bid for Go Air.
Correct. So given the chances of recovery, we have actually recognized the write-off, but the case is still under NCLT, and as and when we get the money back, it will be written as a profit back to the company. But at the moment, given the chances and given the auditor's view, we have taken a call of taking this as a one-time exceptional write-off within the company.
Is this the only one that you have, or are there receivables from other players like SpiceJet and others as well?
I mean, they all are operational, right? This was the only one which, stopped being operational since some time. And as per the auditor's view and as per the course, we have taken this as a write-off. This is the only one at the moment.
Okay, fair enough. I know it's difficult to say, but what is the chance of recovery?
So the case is still under NCLT and it's out for the jury, and hence it'd be difficult for me to say. But as I've already shared before, that as the NCLT settles our dues, we will be able to recover them and put them as a profit in the company.
And what prompted Nishant to withdraw the bid?
That's an individual call. That has nothing to do with the matter. So basically, I'm assuming that it is related to certain course of actions which have taken, and also a self-realization on our part that where we are much better off just being an asset-light business model. Anyways, it was from the personal side. It was not from the matter side.
Okay. All right. Can you give us a sense in terms of, the business now? What is the volume target for FY25? The air segment bookings were around 26.1 lakh in Q4. And for FY24, it stood at around 1.1 crores.
So to give a target for FY25 will be slightly difficult, but I would say this, that, we have consistently grown over the period of time. In the last year, we have categorically said that we would basically be more focused on improving the bottom line. And you can clearly see that the company PAT, if you remove this exceptional item, was about 157 crores. While the last year was about 134 crores. And also, if you see that the cash flow turned positive, last year it was about minus 119 crores, and this year it's plus 124 crores. So actually, cash flow, if you compare year on year, has actually increased by 240 odd crores. So there was a lot of efforts on the company's side to ensure that the cash flow profitability, the cash flow positivity exists, and the company's bottom line becomes even more stronger. We are expecting that the air segment will continue to grow at 15% CAGR basis for the next 10 years, as there are so many new airports which are coming in. We have almost about 2 crore consumers who visit our website. on annual basis. We look forward to continue to see the growth.
All right. On the growth itself, you said that you are looking at improving your bottom line. Your bottom line, yes, it did improve, but not as much as your top line. So if you look at FY24 itself, while the revenues grew 32%, the EBITDA grew just around 19%, which implied that there was a 400 basis points decline in your margins. So what sort of margins are you guiding for?
I don't think so. It is an implication of declination of margin. There were other expenses as well, which increased. In fact, there was some consolidation which has happened over the period of time. In the last year, I think we have acquired about 4 companies, and the consolidation process also takes time. And hence, you would see that our other expenses or our employee expenses have increased a little bit because of the acquisition purposes as well. The margins did not decline. And in fact, for the last quarter, if you see, the margins have only gone up.
Okay. Well, Prashant, overall, what is your view on the industry? Because I'm sure it's getting quite competitive at this point in time. Yatra has market share of around 9%, online travel agencies between 22 to 24%. What currently is your market share? How competitive is it? Do you have to increase your discounting?
So, as a bootstrap company, we have always been competing against 8 odd players. In fact, some of the players do not exist these days, which existed about 10, 15 years ago. So, and now we are in much better position. Now there's a very strong brand name of EaseMyTrip. We're a listed company. I think things are only getting easier with time and also with the economies of scale. I believe that competition is not a concern in our case. We mostly look inwards and see what are the things which we can do better for the company. And I believe that it's only that the coming times for EaseMyTrip are only getting better and better.
Right. What about this acquisition that you made in Jivani Hospitality, for a 150-room hotel in Ayodhya city? What's the kind of investment that you're looking at? And is this a one-off, or are you looking to invest more in hotel building?
No, this is just one-off. We do not intend to do asset-heavy businesses. This was very strategic. This is only 400 meters away from Ayodhya Mandir. This will be the closest 5-star which Ayodhya Mandir will have. And EaseMyTrip will get certain exclusivity in selling that particular hotel. And we were getting a great deal. We were along with a great partner who knows how to run it operationally. And that is why we have taken this particular deal. But this is just one-off. EaseMyTrip is concentrated on acquiring asset-light businesses, profitable businesses, and disruptive businesses, just like EaseMyTrip.
And how much are you investing in this?
That number is not disclosed.
Which is what we are asking you to disclose, because 50% is what you're paying for Jivani Hospitality.
Right. As and when board approves the amount, we will be able to share.
Okay. But what are you anticipating from this 150-room property in Ayodhya?
So it's going to take about 2 to 3 years to basically be live and operational. And the expectation, we have already seen how Banaras has turned around. Varanasi used to see about 20 to 30,000 travelers on daily basis. Now it is almost about 5 lakh travelers on daily basis. So we expect the same kind of momentum for Ayodhya as well. Right now, the current numbers for Ayodhya travel is about 1 lakh on daily basis. I believe that this is going to become a very big, tourism spot for the country. And the expectation is that this particular hotel will generate a lot of demand. And we would want most of this demand to be fulfilled directly by EaseMyTrip.
Okay.
Right.
What is your revenue quickly before we let you go from the other segments, trains, buses, others?
Good that you pointed out. One thing at the time of listing, we did say that we would want to grow our other businesses. And as you can see in this particular year, our hotel segments grew almost by 50%. And our other segment, which is train, holidays, buses and others, grew almost by 66%. So the company is doing fantastically well. Even while improving our bottom line, we were able to grow our non-air businesses with leaps and bounds. And I believe that this momentum will continue with both organic growth and inorganic growth as we are seeing. The company has, just if I can add one more thing, the company sees almost about 2 crore people who visit our website, and the cross promotion becomes very easy. If you are selling flights, these people to basically sell hotels, to sell them buses, to sell them trains is slightly easier, and this is why we would see us to continue grow in this particular sector.
Do you have a target mix for the same? I mean, currently, majority of it comes from air booking. 11.5% came in from, hotels in terms of revenue contribution. What's your target mix going forward?
I think, using both organic and inorganic channel, we would want to see it 75-25 in next couple of years.
Okay, take that point. Thank you so much for joining in and giving us all those views. Wish you good luck for the future, and perhaps you'll answer some more questions when you join us next as well. Prashant, always a pleasure. We'll take a short break, come back, get you more on the markets and get you trading ideas coming from Ruchi Jain of 5paisa.com. The Nifty is surging as we speak. A big move is what you're seeing. The Nifty is now down up around 120 points, and it's led by the Nifty Bank itself. The Nifty Bank is just about 400 points away from the 50,000 mark, 300 points away from a fresh record high itself. In fact, it's been the Nifty Bank story for the last 4 days itself. Just take a look at the last 3 sessions. The Nifty, while it's up around 2.5%, the Nifty Bank is the one which is up around 4.5%. This is accounting for the gains that we've seen in just the last few minutes or so. And now the Nifty Bank is less than 300 points away from a record high. Just about 30 minutes ago, it was 1.5% away from a record high itself. And that's led by HDFC Bank, courtesy HDFC Bank, which is crossed past its 200-day moving average after crossing past the 50, 20 and 100-day moving averages last week itself. So it's a big up move that has happened for HDFC Bank at a near 2.5, 3-month high for that stock. It's the expiry week, but the WIX is higher also because it's the last week of elections, before which on June 1 we will get the exit poll. So that trade will play out, and ahead of that there is some nervousness, which is the street, which is being factored in by the street, even as the prices tell you that political continuity is what everyone's expecting. Option writers are pretty active at the 23,000 straddle. So the 23,000 call and put are both equally active, and the call has a premium of 230 rupees, whereas the put that comes up for you, that has a premium close to around 70 rupees, telling you that broader range that the option writers are positioning themselves for the near term is between 22,700 to 23,300 itself. Watching out for a bunch of stocks. Z is likely to re-enter F&O ban in today's trading session, and Hindalco, which is in F&O ban, may exit F&O ban. But really, this is the story of the markets in form of the Nifty Bank and the private banks itself, HDFC Bank, and now giving it company are ICICI Bank, Axis Bank and Kotak Bank as well.
Okay, all right. Yes, absolutely. It is the banks which are really powering ahead at this point in time. Thanks, Mangalam, for that. Ruchi Jain of 5paisa.com joins in on the show with his analysis on what to expect for the markets. Ruchit, hi, welcome to the show. Well, if you had a choice of, to go long in terms of specific stocks from here within the Bank Nifty, what would it be?
Yeah, hi, very good afternoon, Nita. Very good afternoon, Mangalam. Well, certainly outperformance is clearly there in the banking and the financial space, and this is a catch-up move what we are witnessing. The new highs has been formed in Nifty last week, but still Bank Nifty is a bit far from its previous swing high. So I think this outperformance would be led by some of the private sector banking names, because Nifty Private Bank Index is also looking quite positive over here. So two names from the private sector banks, which I think that even at current levels, one can look for buying opportunity. One would be an Axis Bank, where a clear high top, high bottom structure has been continued price up move supported by good volumes. Last week, we witnessed decent put writing in Axis Bank. So I think the momentum should continue over here. So at current levels, also one can go long on Axis Bank with stop loss below 1140 and expect target somewhere around 1240 to 1250 in the near term. And within the heavyweight private sector bank itself, I think ICICI Bank also could see some good catch-up move. In last few trading sessions, there has been some consolidation around its 40 days exponential moving average, but that just seems to be a time-wise correction, because price up moves are supported by good volumes, but in corrections, we have not seen any kind of high volume setup, a high volume sell-off. So I think ICICI Bank also, the risk-reward ratio is good over here. One can go long with stop loss below 1110 for potential targets around 1200 in the near term.
Okay, and what would your other stock picks be, if any?
Apart from banking, we have already discussed two banking. Apart from banking, I think TVS Motor is one stock which is looking good. We have seen a breakout of a previous swing high resistance on Friday's session. That too is accompanied by good volume. So I think here the downside seems to be very limited, and the stock should head higher towards new highs. So at current levels, one can go long on TVS Motor with stop below 2180 for potential targets around 2350.
Right, Ruchit. Thank you so much for joining in and giving us your views on individual stocks and the indices on the whole. The Nifty closing in on that 23,100 mark now, and this comes in as the Met Department says conditions favor monsoon advance over Kerala in the next 5 days. So it's literally raining good news for the markets right now. The street pricing in political continuity, and monsoon's doing well as well. I mean, earlier, there was hope of a normal monsoon, a prediction from the Met Department, and now saying that monsoon advance in Kerala over the next 5 days should be good news for everyone. We take a short break on that note, and as we do that, let's get you a programming note as well. On 31st May, from 5:30 p.m. onwards, join us live with CNBC-TV18's Future Female Forward, which is the Leadership Circle, a transformative platform where leaders from diverse fields will venture beyond the traditional discourse and share stories of grit and determination and the road less traveled. This Leadership Circle is not just about business strategies and professional accolades. It's about delving into the depths of personal journeys of these trailblazers.
Welcome back. Well, just keep your eye out on a couple of these losers as well. Wipro, for example, is the top loser on the Nifty. It's lost around 3% this year, close to 4% this year. It's losing a little bit of ground at this point in time, and giving it company is even something like an ONGC, which is down around 1.8%. Stocks such as NTPC, Coal India, Britannia, all of them largely sector or agnostic, is showing some amount of pressure at this point in time, down around 0.5% to 1%. Well, for the Nifty, we've crossed 23,100 for the first time ever, so sitting at a record high for the markets. It's just been a one-way street and going from strength to strength in today's trading session, and that seems to be the key hallmark of today's trade. Let's see if the advance decline ratio improves as we go along. Just based on what we are seeing in terms of the momentum, that's probably the case that we would soon see for the advance decline ratio. Maybe it'll probably crisscross soon enough. But let's move on and get you an exclusive conversation. Asset manager Brookfield Asset Management is set to acquire 50% stake in 4 Grade A commercial properties from Bharti Enterprises. Ankur Gupta, managing partner and head of real estate for Asia Pacific region, tells Shireen Ban about the deal with Bharti and how they plan to deepen this partnership.
Well, let's talk about this transaction. And we're sitting here in the building that the deal that's just gone through with Bharti. What is that going to mean as far as the REIT holders are concerned? What kind of accretion do you see on account of this transaction?
So we launched our REIT, Brookfield India REIT, in 2021. And our story was always that from a smallish portfolio of assets, through contribution from Brookfield and creating it attractive for others, like public investors or business houses that own real estate. This can be a vehicle which will be the open source, if I may use the word, for hardware, where people can contribute their assets, take units, create liquidity in a very organized way. Today, if somebody has to sell a building, there's a finite set of investors who can buy, and it's a 0-1. You either own the building or you sell it. By doing something like this, it is demonstrating to the market how people can contribute their assets, but still continue to have an ownership and a commercial interest in the sector.
Yeah, Bharti continues to hold 8.5% in the REIT post this transaction. Yeah.
So for the seller, which is the Bharti Group, has been a partner for many years now in this airport district in Delhi, and we're exploring ways to make the partnership even deeper. They continue to have an interest in a larger portfolio. So through this open source architecture that we've created, it is demonstration that other corporates and individuals can also participate in the story for us. The US commercial real estate space is $20 trillion. India is less than $500 billion right now. So there's a lot of real estate to be built and to be institutionalized. And we believe that as the largest real estate firm in the world, we have a big role to play in that space. What it means for the current unit holders is that a very sophisticated investor and owner, operator, manager, the Bharti Group, has endorsed taking units at 300 rupees a share, which is slightly below the net asset value. So on an accretion basis, it's still positive for unit holders, but it's significantly at a premium to the current spot trading price. So it shows the path for other investors that there's significant upside in our stock price of the REIT right now.
I'm going to jump in with a couple of questions. One, on your statement that you're going to deepen your partnership with Bharti. What does that mean exactly? What are we talking about? On the open source statement that you made, what else is on the horizon? Who are you talking to at this point in time? And the headroom for growth. Forget the US comparison that you gave us, because very different markets, very different size of the economy. But assuming that India continues to grow between 7 and 8%. What are we talking about in the next 5 years in terms of institutional build-out?
So every quarter, India sees more leasing than it saw the previous quarter, and that trend has continued to be very strong. I'll give an example. We built an asset in Pune recently, was built during the COVID period, was leased during the COVID period to MasterCard, one of the largest payments company in the world. It's a 1 million square foot lease that they've signed with us. That asset sits on Brookfield's private balance sheet. Assets like this will continue to be contributed to the REIT. So one is growth coming in from Brookfield's umbrella. And we are the largest owner of office space in the country right now. So that all those assets are available for the REIT over a period as we de-risk the development side of things, and the leasing has taken shape. So the growth of the REIT is coming in from two sides. One is the inherent growth in the unit value of REIT, because most of our leases are indexed to annualized growth.
Right.
There's significant headroom in mark-to-market of rentals. And then transactions such like this increase the enterprise value. When the enterprise value goes up, the size goes up, you attract more investors. As a result of that, cost of capital goes lower. Classic 101 finance. So we would love to, and we would look at every opportunity to contribute more assets to the REIT from the Brookfield stable. And a transaction like Bharti shows the path for other corporates in the country who we would love to partner with and contribute their assets and take units and then grow the business together.
You're talking about growth and you're talking about opportunities as well. I think one of the things that the market is excited about or enthused by is the possibility of you actually upping your guidance as far as new leasing is concerned, because you seem to be on track or in fact have done better than what was expected at this point in time. What's the expectation?
So we've always expected that commercial real estate coming out of the COVID pandemic had hit a rock bottom sometime last year. And the demand side continues to be very strong. People were waiting around at the gates saying, is it the right time? Are people back to work? India never really saw that complete work from home culture. Yes, there was a period of time, rightly so, when the government mandated that we should all work from home, and that helped control the bad effect of the pandemic. I think India. Urbanization is a big trend in the country. In fact, I've gone on and said that we need more suburbanization because our cities are getting a little bit too concentrated. But as far as the REIT is concerned today, the leasing has been, we've achieved 40% of our next 18-month guidance, and I would say that we should beat that guidance now. Two parts are important. We don't only manage for occupancy, manage for overall return, which is we have to keep making sure that our headroom rental growth that we have is also achieved, because that creates outsized returns for our investors and to our own capital. So I would assume that these assets that we have used to run at 95, 97% occupancy, and today we are in the mid-80s. So there's a 10% headroom to grow in terms of occupancy levels and a 17 to 20% headroom to grow on rentals.
Okay, and in fact, you can catch the full interview at 5:30 p.m. today, only on CNBC-TV18. And as we take a quick break, here's a quick note for our viewers. A daily wrap of the top headlines will hit your inbox before you call it a night with CNBC-TV18's daily newsletter on LinkedIn, featuring the top 10 stories on markets, corporate updates, economic insights, and financial highlights. So subscribe now and get the CNBC-TV18 edge.
Welcome back, and joining us on the show now is Paul Bartholomew. He's Senior Analyst Metals at S&P Global. Thank you, Paul, for joining us. And, if you look at the month of April, was a stellar one for most of the metals as a sector, and May seems to be going the same way, especially for the non-ferrous metals. How are you looking at this trend? Are you anticipating any consolidation from here on? Would you say this is short squeeze, speculative rally, or do you see on-ground demand coming in?
Yeah, hi, Manish. I think it's there were different reasons for specific metals for performing the way that they did copper, for example, there was some supply issues coming out of South America. And nickel, of course, there's been some impact on LME. Sort of imports from Russian origin, nickel, etc. But I think those are just sort of short term. I think looking further out, there's quite a lot of uncertainty. I think a lot of it probably relates to the fact that globally, the economies, particularly Europe, China, and perhaps US as well, they haven't quite rebounded as strongly as we were expecting, perhaps, or at least we're pushing back expectations of a recovery to perhaps later into the second half of this year. And that's really, I think, due to the fact that inflation is proving to be a little bit more persistent than many were expecting in terms of getting some relief from some of the central banks around interest rates.
Paul, as you mentioned, well, yes, each metal has had its own fundamentals as well, which it had reacted to. We've seen the best of the gains actually come in for copper and then aluminum and then zinc perhaps. But with copper as well, with all-time highs that we've seen hitting in the previous week, what's your sense from here on? Would you say most of these fundamentals are now baked in?
Yeah, no, I think there's been definitely a bit of some kind of speculative sort of buying, I think, around some of these metals that probably be quite sort of short term. And again, as I mentioned, probably just due to the fact that I think people are taking advantage of some supply sort of shortages impact on supporting prices, etc. I think we're seeing aluminum as well. I guess is sort of has improved a bit, but we've seen sort of some improvement in sort of due to the influence of China. I think the government just sort of came out recently and unveiled a few plans to support the property sector and infrastructure. But we've been kind of seeing that occurring, I guess, over the last sort of 12 months or so, after all the deleveraging of the housing sector in China, the Chinese government obviously trying to unveil a few measures to try and support things. But what we sort of tend to find is that often the price uptick tends to be fairly sort of short-lived, and then after that it kind of reverts back to that sort of residual sort of pessimism, I think, that is still quite apparent really in the Chinese market. I think there's still the sense that it's quite some way away from any strong economic recovery.
So Paul, from here on, what would your stance be in metals, and especially for ferrous metals as well, where iron ore seems to be doing better than steel when you look at an year-on-year number there? Which metal are you most bullish on, and where do you see metals now going forward from here?
Yeah, well, on the ferrous side, I mean, iron ore was an interesting one because I always sort of think of it really as being the kind of, certainly in terms of ferrous prices, very much the bellwether of China's steel market sentiment. It does tend to sort of react to futures. It reacts a lot to policy announcements and trade updates, for example. But yeah, look, I think we see volatility over the over the rest of this year. Probably we've got an average at the moment about $110 a ton for the main iron ore benchmark for this year. If you look at the Chinese steel prices, they're not been as volatile actually as we've been seeing in the US, for example. Very volatile there, to a lesser extent in Europe, where they're really relying on production cuts and restocking to really support things. That demand just really hasn't returned yet, really. So, iron ore pretty solid. I think steel is going to be sort of just down, 1 or 2% from last year. India, of course, is a bit quiet, pending, during the elections in terms of buying of things like metallurgical coal and restocking. So we expect some support for that. Some coal, particularly coking coal, when India starts to restock again. But I think it's going to be a fairly subdued sort of market. We don't see any sort of too many kind of long-term price rallies that are going to persist because there is that sort of underlying macroeconomic weakness, and particularly in the China market.
Okay, all right, Manisha. Thanks very much for taking us through that conversation. Well, on that note, we need to take a short break with the news that the Nifty's cruising at around 23,100, mid-caps and Bank Nifty outperforming. Take a break and be back. Welcome back. Indian CV maker Ashok Leyland will continue to invest in its price subsidiary Switch Mobility. That's the word coming in from the very top. In a rare television exclusive, the company's chairman, Dheeraj Hinduja, told CNBC-TV18's Jude Sanad that Leyland isn't looking to raising external funds for the EV business, even as the company has no plans to demerge the EV business. Hinduja also said that the company will launch its exclusive e-bus plant over the next 12 months and aims to have a vehicle of every fuel type in 2 years from now. Here's a slice of that conversation with the chairman of Ashok Leyland. Listen in and we'll be back with Business Lunch.
UP is going to be focused on buses and predominantly on electric vehicles, electric buses. And we're actually quite aggressive we're looking at a time frame of 12 months. 12 to 13 months to have the plant up and running. So it's a tight timeline, but the UP market itself is very big. The government is very keen to expand its electric vehicle buses within the state. And we feel quite confident that being there, we'll be able to service them much better.
All right. So fair to say more electric than ICE would be the order of the day?
That's right.
And would that be a first of sorts for an Ashok Leyland plant?
Yes, I think keeping it more from an electric perspective, it is a first. But at the same time, we want to make this as one of the best plants in the world.
All right.
So our teams have in fact gone around, they've seen the other bus facilities, they've seen what better we can do from our existing facilities as well. And we're quite confident that when this opens, it would definitely be something different for everyone to see.
And have you earmarked or outlined plans in terms of what kind of capacity you want at that plant?
We're going to start with just a smaller facility with 2,500 buses, which can be ramped up to 5,000.
Okay.
But depending on the market requirements, I'm sure capacity wouldn't pose a problem.
Question that's on several people's minds, including investors and several consumers of mobility in India is, will at any point in time, will Ashok Leyland ever come around to considering a demerger of the EV business? Is that something that's on the cards?
Not really. And when you look at the change that's happening into alternate fuels, what was expected, everyone felt that this transition will happen much faster. But what we're seeing that the pace is a little slower. So from that perspective, I think it makes sense for us to keep the company together and look at the opportunities wherever they can, whether they're joint sourcing opportunities. And that also you can also consider that we're also looking at electric trucks.
Yes.
So in that sense, to look at certain developments, battery strategies, etc., it's better to keep both the companies together.
All right. With that strategy clear, the question then will arise, are you looking at any acquisitions in this space? After Switch Mobility, the kind of impact that you can create in this space has been so pronounced that one wonders, will there be any more acquisitions that you are looking at? And if yes, what kind of acquisitions will they be and how will they help grow your footprint?
Well, I would say that, look, I'd never say never to any of these opportunities, and if a good acquisition opportunity comes around, why not? It could be outside of India as well. But irrespective of that, as I was saying, what's important for us is to keep building our product pipeline. And so whether it's for the Indian market, Middle East market, or the European market, we're making sure that on buses and on light vehicles, we want to continue growing the portfolio.
Right. But are you in talks with any players on the acquisition
Not
front?
at the moment.
Not at the moment. All right.